Good morning and welcome to the Minervini Private Access Training Room. I'm Bob Weissman. If you can raise your hand real quick and let me know that you're hearing me loud and clear. Hope everybody had a good weekend. That looks great. And also let's welcome Mark Ritchie into the room. Good morning, Mark.
Morning, Bob. Morning, Mark. Morning, everybody.
And if you could just raise your hand, letting us know that you're hearing Mark Ritchie loud and clear, which all looks good. Yep. And then let's get started with today's session with Mark Minervini. Good morning, Mark.
Morning. Do me a favor, Bob. Just post that this is started.
Okay.
Oh, I think we forgot to do that.
No,
Anyway,
I did it
everyone.
15 minutes ago, but yeah.
Oh, okay, good. That's fine then. Never mind.
Okay.
Yeah. Good morning, everyone. Hope everyone had a great weekend. Just real quick, Lou Kerner, my good friend Lou Kerner, who is a oracle of Bitcoin and crypto and blockchain, will be joining us live at 5 p.m. Eastern Time on Wednesday this week. And we'll also be able to squeeze in some questions for Lou. And we're talking about, of course, Bitcoin, crypto, and blockchain. Just wanted to give that an announcement. I know we put the wrong date on there. It said April, but it's actually this month, this Wednesday. Speaking of Bitcoin, obviously another big day here, up 52% since our original entry over here. Of course, we've trimmed down along the way and taken it down to a smaller position. I know gold is breaking out too. It had a big day on Friday. Getting some questions about gold. If you take a look on a big, long base, really big. This is the, as Mark put it, the mother of all VCPs. And it certainly looks like we're getting a breakout here. But keep in mind, since in the last several weeks, since Bitcoin broke out when we took a position on February 7th, Bitcoin's gone up 52% and gold's gone up about 4. So I think this is more of a laggard playing catch up, if you will. And maybe this is forecasting, rates coming in, because increased rates, of course, is bad for gold and inflation. So we'll see what this brings us. But I'm not too bullish on gold, especially here extended. But maybe we'll see how it acts pulling back. If we get some type of pullbacks, it's orderly, and then if it can hold up, maybe this would be a play. But at this point, I'm still holding off myself. Let's see, what else? I don't like the way what I saw today with the action in some of these names, something like a GII, had that shakeout and now just fell apart over here. This is seemingly starting to spread. You can see EYPT also could not hold. GoDaddy was holding up real well. Same volatility, getting volatility in a name this big. So it's really seeming to spread here. PJT, another one. I mean, this is just, a bunch of shots across the bow here with this pivot leakage. Maybe it's a quick shakeout. Maybe we get rotational and we start going through the names one by one and it doesn't turn into a major market pullback. But certainly, I think the risk just elevated here and we need to go to hard penny at this point. I think we should be careful at this point. It's been degrading. Plus, if you take a look, the focus list is getting smaller and smaller, and I think the quality of the focus list and the setup is getting less and less and less. What do you think, Mark?
Yeah, well, we've had that internal discussion for a few weeks saying, it feels like the quality of the names are like, and you've mentioned the laggards starting to set up and they can work. And we've got, some that are working. But yeah, all in all, I think here's where you just go through trade by trade. If you're happy with some, profits, you either nail them down, you improve your worst case scenarios and just kind of, and then you trim out some dead wood too. If there's some things that just aren't acting well, you can either tighten up stops or cut positions.
Yeah, we're holding, of course, some of the names that haven't made gains yet, but haven't also hit stops. But usually those are the laggards that don't give you the same octane, if you will. And again, while some of these names, may go higher, some of the stocks we sold, obviously, I always seem to sell early and like to get out into the strength. But I would look, to see if those names can even rebase and maybe be re-entering some of the names that we exited versus just necessarily looking for new names. But yeah, definitely looking like more volatility. I also pointed out we haven't seen an increase of 150% in the VIX going all the way back to the 1990s, around 1999 to between 1990 and 92, I think it is, where we went that long stretch. This is the second tie for the second longest stretch that we've seen since then, for no rise of 150%. 100% rise also has been quite a while. So we're due for a rise in the VIX, which means an increase in volatility, and that's the enemy of our type of trading, volatility. Let's see what you guys are thinking. Get to some questions.
All right. Question from Gary is if you could look at VRTX. Seems to be forming a base, however, it's hugging the 50-day moving average. Is
Yeah,
that a weakness in the
it's
base?
a small base, you know. You don't know much about this one, to be honest with you. You know, it's accelerated, gotten extended. Small bases off of accelerated moves. You got this reversal right here, so you're going to a little bit of supply. Um, you know, it looks okay, but again, this is, you know, another situation where you get that small base. Yeah, it's hugging the 50. I don't generally like that, but if it tightened up here, you know, it could be maybe a trade. I'd want to see it tighten up, though. I still think it needs a little bit of work, maybe a few days to tighten up.
George is saying he bought CRD.A on the February 26th and was stopped out the next day. I was wondering if I should have reduced half already on the 27th when the price cut under the previous day's low.
Let me see. So, bought it on the 26th, right?
Yep. And he's wondering if he should have sold it the next day when it took out the low of the 26th.
Yeah, I mean that was really, you know, that reversal here was pretty gigantic. And then you know you certainly got violations because you erased all the gain. You got below the 20 and the 50-day. I definitely would have, you know, reduced there at the very least, reduced or just get out. It's just too much to overcome. You know, the volatility really just widened there. So and probably just, you know, just to get out there. It's a good example of, you know, getting out maybe before your stop. Maybe you ever stop down here by this low, but this action just says, hey, let's step aside here and just watch and wait and see if it can, you know, calm down.
All right. Question from Ann asking about our Uber purchase on January 25th.
What's the question?
The time Uber had already moved up 60% in the last couple of months. Could you elaborate how to identify if the stock is strong enough to continue to move up?
Well,
So,
I wrote two books on that. So, I mean, that's that's your starting place. Because the stock's up 60%. I don't know anywhere in my work or even O'Neill's work or anybody's work that does momentum investing that would disclude the name. As a matter of fact, you go back and you look at the biggest winning stocks in history, the move prior to their big move averaged about 360%. So we'd like to see a stock be up 100, 200% before we're even considering it. Certainly at least 30, 40, 50% at a bare minimum. So that really doesn't, you know, now that doesn't really, like I said, preclude the stock from us buying it. It actually is showing us that it has a lot of momentum. Plus, you had it really strong here where if you take a look, it's been called ANTS, we call it the MVP, where you've got a lot of up days versus down days, and you get that first pullback after there. It's the same thing with GoDaddy. It was very similar, but we didn't get the follow through on that. So stock just still looks really strong here. It's extended now, but this is a name. Certainly, if you had bought it, you know, you could be staying with this, maybe selling a portion of it, moving a stop up, and now trailing it.
Okay. Question Eric is asking is when we offer the trade grader, will that be allowing them to grade previously entered trades or only trades going forward?
Oh yeah, you can grade. You can just bring up a stock and grade anything at any time. Absolutely, that's the whole idea, is to grade your past trades. So you absolutely will be able to grade anything. Just bring up a chart. You'll be able to annotate it, grade it, and then it'll generate a report card based on your gradings. You'll be able to customize the gradings or use our predetermined gradings.
And then follow up with regard to Monalert. I'm not sure. I'm gonna have to read this slowly. When the stock is sold, it's removed from the Monalert automatically. No more updates will be received in the daily summary email. But would it be possible to keep the auto add and remove, but on the sell date we would receive one last? Okay, so you're saying if you sell a stock today, you don't get today's. It automatically removes it from the Monalert list, so you don't get today's last review of Monalert. Is there a way to add that or keep that on for one last day? Is what he's asking.
No, I'm not going to do that. But you can make your own portfolios too. If you want to follow stocks, you can make your own Monalert portfolio. So just make an open positions portfolio if you want. But I don't think we're going to do that.
Okay. Question was from Mark asking about moving up the stop on GoDaddy to break even on Friday. What was the reasoning? Was it how the prior day's candle on 229 closed that put you on alert, or just the fact that the general market is getting extended?
It's all of the above. The general market is getting extended. I don't like what I'm saying, generally speaking. This stock, I was hoping it was gonna move out there. It squatted on Thursday, and we went to overweight. So just moving stops up in general now and crimping them off and bringing exposure, slowly ratcheting exposure out, selling it to strength. And very simple, to keep your equity curve. This is definitely a secret of Mark Ritchie and Brandon, where as the stocks move up and get extended, they will do exactly what I will do, and that is to sell those stocks into strength, and then behind that, crimp up your stops and start to choke off the remaining trades, especially the laggards. So now you don't want to, have gains and then only to let the volatility that's comes after the alpha take it back. So on the heels of those profits into strength, then you got to start cinching up behind those profits. I don't know. I'm not sure if I characterized that, perfectly for you, Mark, but is that
Yeah, absolutely. And this is where listen, I always say the hardest part for me is managing the winners. The losses take care of themselves. And I think Mark, you alluded to in the weekend video, that sometimes the selling has to be just as disciplined, though, where it might be hard to sell a name that is really running. But taking that alpha is what is going to pad the volatility in your equity curve. And so what we like to do, though, is exactly what Mark just described is, improve your worst case scenario in those trades that are working, then hold a piece. So you're sort of de-risked and you've smoothed out the equity, and then trim out maybe some of those laggards you have, and then give the better acting names the benefit of the doubt.
Yeah, I find the most destructive things for a trader that cause them not to perform well, and one of them is more insidious or more sneaky than the other, and that is the two things that hurt your performance of the average trader is one, not cutting losses. That's the real obvious one, and that one is very few, believe it or not, very few investors and traders actually cut their losses religiously. But the other thing, and this is the more insidious one, is getting greedy. And in between the two, you just get completely trapped because not only, you let losses balloon, and then when you have gains, you don't nail them down. You let those turn into smaller gains or come all the way back and erase all your progress. And then all because you're Monday morning quarterbacking, constantly looking in the rearview mirror, what you should have done. But these traders don't look at what they should have done and say, I should have nailed down the profits and kept my losses tight, and then I would have had a positive risk reward risk relationship. They don't look at it that way. They look at it a different way and say, oh, I should have held this one. It went up huge. I should have held this one because it went down. But I should have, I should have held this one. It went down and I got stopped out and it turned around and went back up. That's how the average person rationalizes, not looking at the reality of that the losses that balloon are what are hurting the performance. And the other thing is just an illusion. You can't even, that's not something that is attainable. I should have done this, but obviously you don't have a crystal ball. So you wouldn't know that stock that you had a 20% gain was going to turn into a 50 or 100. And you wouldn't know that stock that was down 5% was going to turn around and go up. You wouldn't know that. All right. Yeah. So we have to manage everything in real time. So when you're at a 5% loss, every 20% loss starts as a 5. Every 50% loss starts as a 20. So the only way to keep it from turning into that bigger loss is to cut it when it's small. And then, of course, you're going to have to look back, and many of them are going to turn around and go back up, not meet your criteria, and go make a big gain without you in them. That's part of the game, and a very
Uh,
important part.
and there's maybe a similar answer for the Chiam was asking if you could explain why you sold TW on Friday because charting was not showing any violations that day. Wanted to ask what you saw, why you sold it.
Well, first of all, this is one where it was bought up in more of an ascending fashion, and it wasn't perfect to begin with, and just wasn't performing to what I wanted it to. And sometimes I'm just gonna, pull some exposure off. And I gotta make a cut. I gotta decide where I'm gonna cut. So no, not a real reason. There's no reason that did anything wrong. No, it did not. It did not. And you could stick with it. You could certainly stick with it. But I was looking for this to perform better in the short term, and it didn't. I kind of go into, each trade with sort of an expectation. If I see a breakout, I want it to follow through. Certainly, if it doesn't, in fairly short order, if it pulls back and tests a breakout, I wanted to catch support and then to get back into new high ground and to give me a reversal recovery and show that it's a natural reaction. I'm getting that tennis ball action, and if that doesn't happen, I start thinking about reducing and looking somewhere else, or if there aren't many places to put money somewhere else, well then I start thinking, well, this market's not is weakening because the merchandise is starting to dwindle down. The stocks that I have aren't performing very well, so I start reducing. And again, it's not an exact science, but it doesn't have to be, because what needs to happen is that you're managing the gains against the losses in a fashion that you're making more on your gains than you're losing on your losers. So I make mistakes all the time. I sell stocks, they go higher. I buy stocks, they go lower. But in between, I do a very good job at managing the gains versus the losses. And that's all I've had to do to create an enormous fortune over the years.
And then one last one similar is if you could can Mark address why he closed ERJ on the gap up rather than selling just half on Friday?
Yeah. Was this the one? Wasn't this the one that had the news for the buyout
Yeah,
or something?
Correct.
Yeah, I mean, I don't know why it's going higher than that. I didn't really understand it, so I didn't want to take the time to
yeah. This was
understand.
this was an order for, I think, more airplanes or something like that, Mark, if I'm not mistaken.
What's that?
So I don't know if this was a buyout. I think this was an order for more airplanes. Is what it
Had
was.
Oh,
news.
okay. That was,
Had news on it.
oh, okay. Yeah. Yeah. Just, again, just getting out when the getting's good. I mean, it's easy to say, here's the thing. It probably wouldn't be asking this question if this wasn't up today.
Actually, to be fair, this question was emailed to me on Friday when you did it, so
Oh, okay.
nothing to do with
But
today.
okay, good. All right, well, that's better. But normally, what happens is, when I sell a stock and it's up, it goes up more. But so why'd you sell it? It looks fine. And then if it goes down, they say nice sell. But again, just getting out when the getting's good. And like I said, I very often sell stocks and they go higher. So you'd say, well, why not wait? Well, because there's, when things turn around on you, I found that getting out when the stock is up and getting a decent gain versus your risk, it is better than waiting for things to turn sour, because when they do, they break fast. I mean, a perfect example is something like a GII today. Look how fast this. Now, this isn't extended, of course, at a profit, but you see when these stocks start falling apart, they move very quickly. Even GoDaddy, these are coming in pretty fast. And from an extended position, that happens even faster. 1 minute you're up, you're up 5% on the day. Next minute it's down. So just a matter of just starting to bring back some exposure and dial back a bit. That's all. But certainly, look, if a stock's acting well and you want to play it for a bigger move your improve your worst case scenario, whether you sell some, you move your stop to break even, you use a trailing stop, and if you want to play it for a bigger move, go for it. And you could find out for yourself if that style suits you, and if you're okay with giving back gains. And there's two types of traders, ones that look and say, oh, I should have held, and others that, look and say, hey, I should have sold. They're looking after, the stock comes back in and these short-term moves, they could have got the easy money, and they don't want to go through those pullbacks. I'm in the later camp. If you're one that constantly agonizes over, stocks going much higher and you want to play for that big move, by all means do, and then you will learn in real time, and you'll learn for your own self what the cost is to accomplish that, because there is a cost. There's a cost. There's an emotional and psychological and financial cost to either way. If you're taking the shorter term gains, you're going to miss the bigger moves. The cost is the bigger moves. However, if you're taking the bigger moves, you're going to have to go through more volatility, pullbacks, and at times give back what you had. And the cost is volatility, and the cost is your equity curve coming in and losing some time when you could have taken a short win. So either way, you might get to the same result. One way might be better than the other. I found that the shorter term trading and selling for the strength has been able to allow me to compound capital at not only a larger performance, but more importantly, more consistent, and to do it sort of time and time again, as opposed to having maybe a big year and then I've got a bunch of volatility and I've got a year or two that, I'm all over the place where I have a drawdown. I want to be consistent. I want to consistently have a return. And that's, by necessity. When I first started, I was trading for a living. So I had to churn out, I had to churn out a return.
Also, I wanted to just a housekeeping note for some who didn't watch the weekend study session. The Minervini buy risk indicator is now live from the charting page. Under the indicators, you can type in Minervini, and the buy risk will be there in both the colors and the line that would show you the number of the indicators.
You can use either one, or you can overlap them. And I believe if you just go to the gear shift in the modeler on the right side of the chart and put restore Mark's screen, I believe that's it. It will just bring up sort of a default of how I have my setup, and you'll have the buy ready, you'll have the pressure, the RPR above, you'll have the net monoalerts at the bottom, the volume in the chart. That's supposed to be working. So if it's not, let me know, send us a screenshot.
Yeah, and that may be a push that actually gets done today after the close. So because I'm checking it right now, Mark, it's not there right now, but there is an update expected today. So that probably will be tonight. Yep. But that is more changes continuing to come. So we're continuously providing those for you, and we'll probably want to put a post out there once we know for sure. It's but the buy ready is there currently. Next question is coming from Joe, who mentioned February being his best month ever, batting average 59%, average gain of 2.8, and average loss was 2.8. The average gain is low because I was taking massive positions and cutting the overweight immediately after the breakout. If it popped, do the average gain number mean less if you're trading like this?
Well, you're making your edge through the batting average. So if your batting average falls, then you're going to lose money. So I would prefer that's a day trading that's a day trading number. So I would prefer to see the loss tighter than that. I still, no matter what, I want my loss to be smaller than my gain, and generally speaking, by 2 to 1, I want my reward to my risk. So if I have a 2.5–3% gain, I'm going to want maybe a 1.5% loss. So that's why it would be maybe tough to maintain that. But I find it's tougher to maintain a batting. See, the batting average, you don't have any control over it. That's the problem I have with that. So my way of getting around not having a handle on something is not to rely upon it, but I can completely determine and quantify and control the amount of risk that I take. I can stop out and control the loss with with a high degree of accuracy and control, and I can adjust that to the pace car, or the pace of my batting average and my average gain. So I get an idea of where I am with the batting average and the average gain. I adjust the loss, and that keeps me always with an edge. and you don't have an edge except you're making more wins than your losses, and you don't have any control over that. So when that switches and you go into a bad environment, you're going to run into trouble.
All right, Lance is asking what was the rationale behind selling half of EQH? It would be educational to understand the rationale and live stream to facilitate our learning.
The rationale is always the same. It either is violating or I'm forced displacing somewhere else. It's just not performing, the way that I expected. And usually there's violations piling up, or it's at a profit and I'm nailing down profits, and usually it's a multiple of my risk. Or it just might be that, the market, things are starting to turn sour and I want to raise some cash and start, chopping off some names. But usually it's one of those. But in this case, obviously, you've got a pullback here and then it's not rallying. You got a few violations here. I think just didn't block at me. Hold on a second. Okay, there we go. Yeah, and just being incremental, just being incremental with it.
Okay. Hazem is asking if WS is buyable.
Yeah, I've been watching this, and obviously, it came flying out over here, came back in. I mean, it's pretty volatile, this is about 30%, so it is tightening up pretty nice. It's not, it appears more volatile than it is percentage wise, but it still has a volatile nature, the way it's acting here. So it is calming down. I mean, I'd like to see it even tighten up a bit more. These are the type of setups that I like to see if the market were to come in and it would to stay tight and then break out as the market comes off the lows. You got to be careful when you get these setups that, especially if they're volatile, going into a market pullback or a period where you start to get volatile. So when I start to see these stocks where, like, the GII, the ones that we're whipping around today, I start to see that volatility increase. I'm more careful, and I want the entry to be even tighter, and I want to go with the least amount of volatility. So just would be a little cautious here. Things were going really great. Everything was rip roaring, back a few months ago. Yeah, definitely be buying this coming out, but maybe a little tighter. But obviously, the pivot is above this 32.19-ish area. It's one I'm watching, though. It was close to putting it on focus.
Also, he's asking about DFIN.
Yeah. So this one I didn't see. I mean, I think, it could work. You got this shakeout and you're coming into new high ground here. It's acting pretty good. You could try it here. I mean, it's not my favorite. It's a small base, doesn't really have a really tight right side. Sort of just riding the 50-day up here. It could work for maybe a trade.
Seems for the volume it does, it seems very thin. Looking at it. Question from Greg is asking, how frequently and how far back do you look for feedback to decide how you want to manage your next trade?
I'm not sure I know what that means.
Presuming either you're trading personally or
analysis.
I think we're talking like, Mark, the stock tactics feedback, meaning are you looking feedback your last trade, your last 10 trades, to sort of gauge how aggressive you should be for the next trade?
Yeah, I mean, I'm looking at the current holdings, the focus list. How my focus list. And maybe you want to answer this too, Mark. How you handle that? I mean, it's certainly it's sort of like my last wave. If I've taken 4 or 5 positions, let's see how those act. They act well, I might start adding. And if my last 4 or 5 trades aren't doing well, that right away puts me on alert. And if another, wave, let's say, and I'll do another, 3, 4, 5 trades and those aren't working well, then I'm pretty much right there. That's kind of says it all I need to know. And I'm going to take it easy until I start seeing a few handful of trades start working again. I don't know. How about you, Mark? I know it's not exact science, but.
That's right. I was going to say it isn't exact, but the most recent, the most important is the way I think about it. So I might be holding a trade, that I was in from 2 weeks ago, but if the last 2 I put on aren't really acting well, or even more importantly, you buy something and get clobbered on it, you know, that gets my antenna right away. Or even the idea of feedback, as Mark was saying, all of a sudden stocks they're opening up a little bit, or you're starting to see volatility on the right hand side start to proliferate, you know, and that's all I need to know to start riding the brake.
Yeah, I'm really engaged in a couple things. One is more of a feeling, and that's portfolio pressure. How am I feeling pressure? Like, do you feel pressure on your trading? Now, you take a few trades and they go against you, and now you're down and you're losing money. You feel pressure. You know, that's what we call portfolio heat. How much heat am I feeling? And if I'm not feeling heat, great, things are working. You know, I'll loosen up a bit. The other is the net progress that I'm making. What kind of net progress are we net? Are the trades that we're taking on balance? Are they making money? I mean, maybe we have a couple winners, couple losers, but is it sort of parity, or the winners bigger than the losers? Um, you know, you're getting a lot of stops, and also then really the quality of the trading, of how setups are breaking out, whether they're catching support on pullbacks, tennis ball action. If you're getting leakage, pivot leakage, or you're getting outright failures. Like right now, in the last week or so, we're starting to see leakage. Now we're seeing extended names and some leakage. Now we're starting to see absolute pivot failures, and volatility has picked up. And immediately right now, the portfolio pressure just picked up right here today. It's definitely picked up, and it's been a little increasing a little by little. And that's why little by little we went to orange, and now we're going to red, because it just the pressure is picking up here, and it's getting to a point now where, you know, my experience says this is getting to, you know, the point where it's too much. And I could be wrong, and then we'll adjust and we'll go back in if, you know, we see setups start to work and proliferate again. But you know, the focus list, you see when it expands and you're seeing trades on balance working, we're making money. You know, when it contracts, and stocks are extended, and then you start to see on balance the most recent trades, you know, not make money. You know, you go the opposite direction. I mean, it's really just being a real in tune and being a caboose and letting the market and the stocks be the engine.
Okay, next question coming from Raphael on the question and answer session of February 26th. I asked about the obsession with analyzing numbers. I'm interested in how marks turnover their portfolios faster when they do.
So yeah, I mean, I don't know,
There's a
Mark.
little more. There's a little more to it. Let me just read. What does Mark change? When does Mark change his tactics, and why? When to take quicker profits, and most importantly, I think a lot of these answers are kind of what you've been describing, Mark.
I would, you know,
When to take a
generally,
loss smaller than initial stop determined before entering.
generally speaking, after you have a bear market or a correction, you want to be more, you know, more apt to be more patient and let gains come to fruition and take bigger gains as the market gets, the bull market ages and you start getting later and later stage. You want to start gravitating more to trading. This is just sort of a general rule of thumb, but you got to gauge it. I mean, what is the upside? Like, our stocks going up 10, 12%, you take these short-term profits and they keep going and more stocks are setting up. Well, then you want to start widening your you know, your parameters for the upside. Or are you, you know, cutting your losses at setting risk at 4, 5, 6, 7, 8%, and stocks are going up 4 or 5%, and then coming back in, and you're not able to even cover your risk. At that point, you'd want to take profits quicker and cinch up your losses. So it's a matter of just, you know, I'm not making like a crystal ball decision here. I'm making a decision on looking at the exact thing you're looking at, just looking at how the stocks are performing and what I'm able to get on the upside. You know, if stocks are what they're giving me, you know, what kind of reward is for the taking, if you will. I don't know, Mark, you have any?
Well, sort of like context, like you described, you know, there's a lot of things, and you know, we always talk about there's the science side of trading, and then the art, and the more you do this, the more you get better at the art side as well. But you know, a good example would be, you know, okay, Mark mentioned earlier in a bear market, or excuse me, coming out earlier in a bull market, yeah, you tend to, you know, want to give names a little bit more the benefit of the doubt. Think of it in terms of the base count, though. You know, if a stock's on a 5th stage base versus a 1st or a 2nd, I'm much more likely seeing it as a tradable situation, maybe than something to play for a bigger move. So there's a lot of, factors and variables like that. And then, when to, take losses smaller, it's violations, like Mark just showed that example. What was that name that had a big outside day, that someone gave as an example? Well, there's a situation where you start trimming the position ahead of the stop.
Yeah, MDY is a perfect example of how we're going to do nothing different, whether even when I'm trading an index, it's an example of a few things, but you see, look at this big base. It's just a VCP. This is a weekly on the right side here. If you look at the daily, really tightened up quite nicely right here. And this is a sort of a telltale sign that I'm moving to diversify, still participate in the market, but start coming off of the individual stocks, which is going to give you that leverage, but also give you the leverage on the downside. When things start getting volatile, those stocks are going to move and have a higher beta than the market. And then going into the indexes that are looking the best here as far as a setup, just like a stock, and just sort of, getting more diversified here through by default through the indexes. But here, just, perfect example how you break out, you come in for a day, right back to new high ground, tennis ball action, pulls back for a couple days, bang, right back into new high ground. I mean, this is acting perfect, So the analysis is going to be exactly the same for this as it would be for a stock. This is the MDY, of course. And same thing, if we bought some of the IWM for the Russell 2000, which hasn't come out of its base as much, but again, you remember me saying this needs to tighten up here and then break out. See, it's doing everything that I anticipated. So that means a train is coming in on schedule. And as long as it's coming on schedule, we're gonna buy, we're gonna stay with it. And then, if it's not coming in on schedule, then we know something's wrong. It's not, trade's not working properly, and we're gonna step aside. That goes whether we're trading the indexes, whether we're trading Bitcoin, coming off of a this is a perfect cheat right here. Just acting absolutely perfect.
Okay. Question. As a follow-up to that, though, which I did want to have you address, Mark, Raphael was mentioning that Mark mentioned that in practice he carries a maximum of 12 positions, but typically 2 to 5 big positions, which is very different than the typical trading style visible through the platform's alerts.
Oh, okay, you're right. Well, I'm not sure what the question is. That's a statement, and you're correct. You're not going to see if I have 3 positions or 4 positions, because we're not running a Mark Minervini model portfolio, and we're not going to.
Yeah, I think that's what I wanted to just have you address is a number of positions that are being recommended on the platform is not to say Mark is taking each of those and all those.
I think that's made clear in the giant bold red letters that are posted every morning, by the way.
So that's Raphael, where I want to make sure you're aware that is not, the number of activity is for as an idea generating service.
We have people coming on every day, new members. We have to constantly have idea flow. This is an educational platform. All right. This is not a model portfolio. I'm not managing your money. You're managing your money, and you're here to learn. And so these are examples. If you're looking at it as, you join Minervini Private Access to piggyback Mark Minervini and make money, you join for the wrong reason, and you probably should not stay with us, because you're not here to learn and to become a great trader, and maybe put your money with a good money manager. But I don't manage money for anybody else, and I don't plan on doing a model portfolio where everybody's going to pile in. We've been considering doing a more selected. We actually have something very, very aggressive that we're considering, and it's a one stock portfolio, or I shouldn't say portfolio, but sort of a select idea where we say this is sort of our best idea, and then we discuss it. Problem is, liquidity, and you have a lot of people now rushing into this name and moving the name. We don't want to, do that either. So we have to balance it, and that's another reason why, we stay more diversified with the post, if you will.
Okay. Timothy is saying on the weekend, you have mentioned the S&P 400 and the Russell 2000. Is there a reason you haven't said anything about the S&P 600 small cap?
Yeah, I mean, I think that's another area. You can probably, it's probably just as good as the Russell. Um, yeah, there's not really a reason. I mean, the Russell's fine. I tend to use, I think between the Russell and the mid cap 400, you sort of get a good cross reference of that small and mid cap.
Okay. John is asking, was FICO, FICO, a good buy today on breakout above the February 26th high?
I mean, this thing just keeps going and going and going, so I think it's massively extended, but I thought it was extended, over here too, and then over here. I thought it was curtains around here. I thought this was probably the last move here. But sometimes you get those additional thrusts, and that's really where you got to have the discipline to when you start getting extended on these names, sell into it or at least start backstopping your gain so you don't give back a big portion. So, but my answer is for a trade, maybe, if you're a short-term trader, but I wouldn't make a case for this. This was back here, as you can see. This was the buy point right here. And I think that was your real optimal buy point. Your lowest risk buy point was right there. As we started turning into a new uptrend, you got the big move here, the big institutional move. Then you tightened up, and there's your first breakout there. And I was looking at it for second base, but it never really sort of tightened up. It just got volatile here and just went ripping into new high ground. Same thing here. You got a little quick pullback right into new high ground. So yeah, it's starting to seem like it's getting more euphoric here. So I would use strength for selling.
Okay. Kobe bought BVN on February 27th. If you could evaluate.
Yeah, well, this is the one that had some, I forget if this was also proposed merger or something, and that's why we stayed away from it. I think we talked about this several times, but it's set up, but I believe this was a proposed merger. So we would normally stay away from that. If it's a recent proposal, if it's a proposed merger a ways back, 6 months, a year, if it's a deal, some kind of deal that was put on the table and then it doesn't happen. Sometimes we'll trade it subsequent to that, but when it's around the time of the base, we usually don't get involved.
All right. Miguel's asking what do you think about CXW? He bought it on Thursday the 29th as it poked its head out with a staggered stop just below the 50 to 50 day. And the other stop below the February 14th low.
Yeah, I mean, it's not my favorite. Would like to see as these highs here. It came up here, 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 3 or 4 times. I didn't really see it really defined over here as it starts turning up. This is more of a sort of a pullback buy. I would like to see it spend more time and tighten up, and that's exactly what's happening. It came up and it failed at the breakout, and now this is sort of your where the rubber meets the road, and you got to see if this can hold up. And this is the type of name that if it can hold, even maybe it comes in a bit here. Oops, sorry about that. Just had someone send me something and it went over my screen. And maybe the market, we start to see some pullback and starts to get volatile, but this starts tightening up. And during that period, stays tight and then comes out from there. Sorry, I was get this messed up. That's what I'd like to see, a bit more tightening. And it could work, but to me, I'd like to see I'd like to see a better base here.
Okay. Question was also about the QRA. QURA that we have on focus list today. What are you looking for the name to do in order to buy it?
KURA?
I'm sorry, I mispronounced that. KURA. His question is, what are you looking for the name to do in order for it to be buyable?
Well, the same thing I would look for every time. It has to move above the pivot. Obviously you can see this is forming a VCP. It's tightening up on this right side. I would, love to see it just stay quiet here and maybe, in a day or so start moving out. but I mean, it's very close to being viable. I love this big move here on the big volume, and then you got the follow through, and now it's been able to tighten up. So it's showing a lot of momentum. But I would caution that, we're seeing, we just saw like a stock like EYPT, it just come apart here at the seams, and this was one that was already leading. So I would be careful here. Even the high alpha names, you may see they're not working out or responding as good as before.
All right. Sh- okay. Shari just wrote partial statement. I'm not sure if you finished it later, but maybe you can finish their question. Ron was mentioning in this week's general market analysis, you mentioned observation rotating to mid caps despite the STEM model indicating a red status. Can you explain how this rotation aligns with the STEM model's current assessment? If leadership begins to emerge within the Russell 2000, would this shift the STEM model to green for mid cap stocks, for example?
Yeah, of course. I mean, the STEM model is simply the stock trading environment. But, that rotation that I'm talking about, we haven't really seen that show up in a lot of names, like where there's this big contrast and we see all these mid and small caps setting up. If we were having a lot of stock setups and they were working, it wouldn't matter whether they're small, mid, large, mega cap, doesn't matter. The STEM model is agnostic as far as that's concerned, is neutral as far as market cap. It's just it's just our read of the environment and whether we have viable, tradable ideas. So yeah, I mean, if we get that rotation and there's ideas. I mean, we may get a rotation where you start to see mid and small cap set up and break out, but it's not that pronounced where it's not that it's just small and mid cap. It's going to be a blend, of course, but we're looking to see if there's something more pronounced that takes place. But certainly the STEM model that's not going to affect it. No.
Right. Angela was asking both marks following the post-trade analysis. I decided to mainly trade larger bases, which are tight with an RS of 98 or higher. For your asking both marks' opinion on that strategy.
Larger bases and with 98 or higher, I think is a mistake because now you just eliminated all the power plays, and that's precisely what you want to look at the 98, 99. I'm sure Mark probably thought that immediately as soon as he heard you say that. So I would add the power plays as the smaller bases, but when you say large bases, also you got to be careful that you don't get too locked in. It sounds like you're getting locked into like a predetermined opinion. The base size is a function of the market environment. You get big corrections, you get big bases. You're in a bull market, and you get regular garden variety pullbacks of 4 to 7%, sometimes 10, 12%. You get small and medium size bases. They got to be put into perspective. But again, there's minimums. If you're IPO, you want a few weeks. If you're a tight flag, a power play, you want 10, 12 days, absolute minimum, a couple weeks, 2-3 weeks or so. And if you're getting the larger bases, you're trading off of low cheats handles, you're looking at 7, 8, 12 weeks, like to see, minimum of 5 weeks for a flat base. So those are sort of the the baseline minimum parameters. But I don't get locked in to say I'm only trading this. Except when somebody first starts trading, they're brand new, then I want to narrow them down. I want to say, look, you could only trade this. You could only trade in this, sector or this section. Maybe let's call it the top, 5% of RS, and you can only trade from, low cheat, and handles, whatever. I want to narrow them down so they don't get too confused and scattered, and really hone down some basic fundamental techniques and then we build on that. That would be the only time that I would get really that restrictive, if you will. I don't know, Mark, you have anything to add to that?
Yeah, you covered most of it. I was just going to add, though, Mark, in my experience, it's almost really large bases are rarely going to have a 98 RS or higher. So
Yeah.
you're not just going to limit
Yeah,
yourself.
there'd be
Oh,
a bear
just
market, it'd have to be in a big
right. Only in the, you know, coming out of a bear market would that be the case. So you're not just going to limit yourself from power plays. You're going to limit yourself from a lot of potentially tradable setups. So yeah, that would just be my comment there. But I think Mark's point though, if limiting yourself when you're new to maybe one type of setup, I wouldn't necessarily though, you know, say just give it an RS number. I have an RS cutoff, but I wouldn't say, you know, maybe just focus on cheats or something like that. But again, you know, I'd be curious. They said this was following post-trade analysis, so maybe an example of what they're talking about would be helpful too.
So gold is a perfect example of a very large base, but during this period, um, the comparing that to say the S&P 500 or certainly the Nasdaq, it is drastically underperformed. So you've got this large base and you got relative strength line that's going into like new lows and is probably, you know, in the 50s here. I don't know exactly, but I know it's low, just by looking at the chart of how it's gone sideways for so long. So again, you know, you can't just say a large base. It's got to be put into context.
Okay. Couple repeat questions here. Michael was also just making the comment if that he really likes the stop loss tutorial and asking if you could do one for selling into strength and selling into weakness. Luis is asking if you would review FDMT as a trade today, showing a lot of volume on the intraday.
FDMT.
Right.
I'm not aware of this one. Let's see, I'm just curious. Okay, so I came in about 27, 28%. So it's a little bit deep here. Let me just take a look here. Yeah, I'm not aware of this one, to be honest with you, but this looks like, you know, it could be for a trade. Just a little excessive on the pullback. I like to see this stay within 20%. The you know, the shorter, the less, the better. Yeah, so it looks good. I mean, it looks interesting. And again, market's working really well. Everything's popping. You know, I'm gonna be more forgiving. You know, I'm not gonna be a total stickler and say it's got to be 20%, maybe 22, 23, 25%, even a smaller cap. I'm sorry, a lower price name that's more volatile, give a little bit more room. So this one's a little bit excessive. I don't know what this news was. You know, I'd have to do a little digging and see what's going on here. But as far as, you know, this is a really nice little, obviously a little VCP setting up with a cheat area. I'll look into it. Maybe we'll add it to focus list. But
Ravi's asking if you can evaluate the right-hand side of WFRD. Is this a high handle starting from February 22nd?
I'm sorry, what was it?
WFRD.
Oh, yeah.
Rutherford. Can
Yeah,
you
yeah.
draw what you would like to need to see to be interested in this thing?
Yeah, well, it's already broken out, you know, and it just really, I'm not sure what happened here if this was earnings. It looks okay, you know. I don't know what I'd have to see because at this point, you know, I can't say because I haven't even looked at it and really done any research if I am interested. So I can't really say that. It's not to a point where I can say, hey, if it just had a couple more days, you know, it doesn't really look like something I'd be interested in the first place at the with this right side, the way it's acting. But it's fine. I mean, it's, you know, it's outperforming recently. You own it, let's stick with it.
Also, Ravi's asking, ignoring today's action in EYPT,
Yeah.
when were you considering buying it off of a natural reaction or positioning yourself for a formation of a new base? He has a hard time understanding the context of the buy.
The context of what buy? The buy that we made? We made a buy. You're saying, when am I going to buy it? We already bought it.
Yeah, that's
We
just how
bought
it's
it
written.
here originally, and we sold. Then we came back in over here on 227. That was just on a little pullback. You had a little 1 day pause, and this was it. If it either goes and or you know, builds a little natural base here and then goes, or it doesn't, and we get stopped, and we're getting stopped. I mean, the optimal buy point though, once you had that big move and you got the power play setup was right here. It was over here. It was trying, but it didn't really tighten up much. And then it needed more time. And then right here, it got nice and tight. And then we bought it right here on 122.
All right. Toby bought PIPR on Thursday. Can you share your opinion?
Well, as I said, I mean, I like the way this is holding up really well. And you certainly got some, you had a good, some good demand right here. Then you had some volatility, but it tightened up. So I think for a trade, and it's holding up, relatively well in the short term. But like I said before, I think we're starting to roll into the laggards now. These are some of the names that haven't moved or been lagging the move, and that you got to expect less. You got to expect more stops to be hit, more volatility, not as big upside, and bigger slippage. So just adjust for that. But so far, it's acting fine. Again, if I wasn't getting a bit cautious here, I might be buying this right here. But I'm taking more of a wait and see because of the volatility that's happening. I want to see if these stocks are going to fail. You're going to get some of these breakouts, and then at the end of the day, they're going to, be down or have big reversals or pivot failures and outside days. So just taking it. I'm never in a rush. Except to cut my losses. That I'm in a rush. When it hits the stop, I'm out immediately. There's no vacillating, there's no waiting, there's no looking for news and just out. But to buy an idea, if I miss it, fine. I missed an opportunity, we go to the next one. But I'm being very incremental all the time, never just jumping in with both feet until we really see the whites of the eyes here. And I think, we're seeing bloodshot eyes now. So we got to be careful. Certainly, Bitcoin is just in its own world. This is morphing into a power play type setup here. It's almost a double.
Yeah, right. Coming up to the 2.5-year-old all-time high on 69,000.
Yeah. You get that, maybe get to my $100,000 target before we know it. But it is getting very extended, and this has made a big run. So it's going to have a pullback at some point, and probably a sharp one.
Always does.
Yeah.
Tim was asking, what was the reason for the stop change on Airbnb?
Just simply that we're always looking to improve our worst case scenario. And as the market, certainly we're moving to red on the STEM model. So when we move to red on the STEM model, that means that we're starting to see trading that is, making us concerned. So why would we have, the same size stop? We're going to want to crimp up the stops because once again, if you get into a tougher market, you're going to have lesser upside. You're going to have a lower batting average. So you have to adjust for that. So we're always adjusting upward the stops. That's the goal. Our goal is to get in, have the stock go in our direction, and as quickly as possible, move the stop up so we don't have as much risk or have no risk. So that's just standard operating procedure.
EW is asking on the price action of GIII, dropping almost 10% the first couple of minutes. This is the second time in 2 weeks that's done it.
Yeah.
Slowly pulling back up. Can you comment on that?
What's there to comment on? I mean, it's down. There's nothing to comment on. His stock has gotten big volatility. It tried to tighten up, and we got stopped out. I don't know what to comment on. It's it's not looking good. Obviously, it sounds like you're still holding it. They didn't stop out.
George is saying he's been reviewing the S&P 500 model strategies on the platform. I noticed you call those the SPY strategies. Does that mean when employing those models, you use the SPY ETF or IVV or VOO, which are some of the other ETFs representing the S&P 500?
I would use the SPY.
And then also, if I invest in a portion of my assets using that strategy, should that portion be in at 100% now since the models are at 100%?
Well, yeah, the allocation is to that's giving you your allocation. Now, if you want to wait until you go on a sell signal and get a fresh new buy signal, that's the choice you have to make. But remember, there's been periods where this model's gone years and years and years with staying on a buy signal. So you could miss an awful lot with that. I would just, I would look at maybe, getting in gear with it on a short-term pullback. So if you're not in, maybe the market comes in, we get a pullback of 4, 5, 6, 7%, and it's still on a buy, then go in and go to your 100%, and buy on a little pullback. At some point, you got to get, if you want to track it and you want to use it as a strategy for your capital, you're going to have to get in gear with it. So, like I said, waiting for it to go on a sell could be a long time.
Especially
And it
with
could
the,
happen in a number of weeks. It could happen very quickly. So we
Yep.
don't know.
All right. Then James is asking to Mark Ritchie and Brandon purchased MNDY Monday on January 18th. He's asking how have they handled this trade so far?
So yeah, we're out of this. We got de-risked before the earnings, and then I want to say 2 days prior to the earnings, and I can double check that with Brandon, but and then got stopped out sort of on the remainder on that big gap down. So again, there's a good example of don't have a crystal ball, but sort of moved the stop to break even. The volatility was a little wide, stepped aside, and then of course sold right near the lows, but that's trading.
Right.
So took a small gain net on the trade after de-risking it. So
Okay. Thoughts? Trevor is asking on INTU.
Yeah, this is one that I saw this weekend because it came up on the tight screen, our tight screen, with the volume down. So again, it doesn't have much of a base, and it's holding up well. And this is one that, maybe as it moves out here, you can trade it for a trade, but it's not coming out of of a large base. So I look at it as a potential maybe short-term trade.
Okay. Ron Shorter. Okay. Joey, I'm having difficulty putting the break-even stops, even if they do not make technical sense on the chart. Can you please talk about this? I have difficulty putting on break-even stops.
I don't know why you would have difficulty. I don't know what that means. Difficulty technically or difficulty mentally. I don't know what that
See,
means.
sounds more mental in my read of the question.
I
Because
don't
she's
know
saying if
I
they
don't know
do not,
anybody would have a difficulty with breaking even. Like nothing lost, nothing gained. That's you reset, you start over. I mean, to me, it's the easiest psychological. And I know for some people it's hard. They have a gain and they, to move it up, choke it off, but I have to have more context. I don't even know what the question is, except you're having a difficulty placing a break-even stock. I don't understand why you would have difficulty with that.
all right.
And again, we place break-even stops from different, depending on what the stock does. If it's up, when the stock gets up a lot, it's up 20, 30%. Break-even stop is sort of just like basically a free fall backstop if something were to happen and it moves real fast. But, for instance, we have technically a break-even stop on IBIT, but I'm not letting the stock go back and erase a 50% gain before I get out. That's just in case it just gets clobbered and something and, we can't get to it. But yeah.
All right. Russell is asking how to calculate risk and manage ANF going into earnings in 2 days. Bought on small pullbacks starting with January 3rd. He's up 44%. I'm sorry, bought original third up 44% since January 18th, adding positions on 2 subsequent pullbacks. Thank you for your help.
This has been the ultimate alpha stock. I mean, this is really is about as good as it gets for a stock just marching its way up. You can see it's marched the 20-day, the whole entire way up here, and it's doing exactly what I speculated that it would do. If you remember, I said it's going to start accelerating to the upside probably, and that's where I would use that strength. It's starting to curve up here. You can see, and this may who knows, maybe on earnings, that's where it really accelerates. But maybe it goes parabolic. The way it's acted so well, I wouldn't doubt it. Leaders like this usually, run up and then they go parabolic and they suck all the retail money in, and that's what institutions sell right into it. So, I mean, if you own it, certainly you backstop it. I mean, you can look at the implied volatility, see what you're looking at for volatility. But not much to say here. I mean, it's acting great. It's been one of the best, I'd say, acting stocks. I don't know about performance as far as percentage return. That's a different case, different issue. But as far as the alpha that this is delivered with the lack of standard deviation, it's probably one of the number one stocks in the market in those terms.
Okay. Sam is new to the service. I really appreciate all of your trades and insights. Question: the chart tab is 1 day behind. Is there a setting we need to change to make the chart tabs current? So that is all based on end of day, which actually is down at the bottom in the sort of footer. It shares that the prices that currently are provided based on the end of the day. That updates around 4:20, 4:30 p.m. Eastern time, but in the near future, we are going to be looking to bring on real-time pricing. So stay tuned to that, as that's one of the projects we are working on currently.
Yeah, we are working on it right now on changing over to real-time quotes, real-time charting. So intraday.
I have a brief question about selling. In which situations do you sell 50% at 1 times your risk? Torsten is asking.
There is no answer to that. There is no black and white answer when you want to de-risk your trade. I mean, if there's a number of times where you might do that. If you went overweight, that would be a time I might do that. So maybe I take a very large position, it runs up, and let's just say, and again, 1 times your risk is a typical de-risking of the trade. So trade goes up. You put a stop at 8%, it goes up 8%, you sell half. You've now created a riskless trade. You've created a free roll, right? Because now you've taken the amount that you risked, and now you have a half a position with no risk. So that would be, the time. It's wouldn't be based necessarily on risk reward as much as de-risking.
Tim is asking if the price activity on Ollie is acting normal.
I mean, it's definitely, a more of a laggard. It's in a process of building a base here. So I'd say it's still, you got 1, 2, 3, 4, 5. You're on 6 lower lows now. So this is probably saying that this is going to take a bit more time. I'd like to see it hold and not come all the way down to the 50. I mean, even though if it came to the 50, that would still be quote unquote normal, but it would need probably more time, and then you'd have to build a bigger right side. So, we'll see. I mean, right now, yeah, it's not acting really bad. But again, we're going to stop out of it. If it comes in and too much, we're going to mathematically stop out of it, and then maybe look to re-enter if it can reset. But certainly, if you bring this up, you just bring this up and look at Monalert, you're going to see some violations. Today we're below the 20. So if it closes below the 20, it's going to be a minor violation, but coupled with the lower lows, we don't see a big volume pickup, so it's orderly. But after your 3rd, 4th lower low, we look for support. We're not catching that support yet. So it's definitely, the picture is dimming a little bit, and maybe it's time to reduce if we don't see some support here real quick.
Okay. Michael's asking, you talked about more laggards breaking out in the weekend study session. Would you rate any stocks on our focus list or in our open positions list as laggards?
Yeah, many of them. Certainly, something like any stocks that are breaking out now from bases, are mainly laggards, because we've seen the market make a pretty big move here, and a lot of stocks move. And now if you're having stocks start to break out here, those are the laggards. Those are the ones that did not break out early on and with the initial move of the market. Now you may get stocks that are coming from that are breaking out of bases now, and they're actually leaders coming out of a later stage base. That's another way of a stock that, could be breaking out now and and look like a laggard, but it's actually a leader that's coming from a later stage base.
All right.
I'm talking about stocks that haven't performed well, and also lower RS names. Some of the lower RS, seeing some of the names come out of the lower RS, the bigger bases that just have been lagging and trying to play catch up here.
PW asking about FITB, if this is buyable, even though it is a bank.
FITE?
B, Bravo.
No.
Fifth Third.
Yeah. Oh, Fifth Third. Yeah, Fifth Third Bank for many years when I first started trading, this was like a juggernaut. This was, you could hold Fifth Third Bank for the rest of your life. That was the sort of the thought process on Wall Street, or the general rule of thumb with this particular bank. It was thought it was a very well run. So what's the question for this? Is it viable?
Yeah.
I wouldn't buy it here. I mean, it's it doesn't even have a right side built here. So there's no pivot, there's no base. There's a base being formed, but there's no right side. There's no completion of the base. So I wouldn't chase it up here.
All right. As we're wrapping up here, I'm just trying to read a quick question from Harshit. Is asking, would you suggest to de-risk strictly based on risk for a given trade or your Dharma? My average loss for all trades is currently around 4%, and average gain is around 8%. If I am in a trade with 2% risk, should I de-risk at 4% or wait for the 8% gain before de-risking?
That's a great question, but again, it really, and Mark, I definitely want you to chime in on this one. This is a more, thought-provoking question. So it really comes down to your plan for the trade and your tolerance and position sizing too. I mean, if you took this massive position, and you're massively overweight, you might want to de-risk smaller, and take that profit. Sometimes I'll take the smaller trades just simply to build up some capital to be able to finance my bigger risk trades. So I'll take some small risk, keep my risk tight. That allows me to position size even bigger, and that sort of makes up for it, because obviously if you got a double position size, the stock goes up 4%, it's the equivalent of 8%, right? So I might say, hey, I've got the equivalent of an 8% gain here. I'll sell this, and now I've got that capital to go and take another position, or maybe take half off and buy a half position somewhere else and finance that. So it really depends. This is, I always say, like, for those of you that are old enough to know Bob Ross, he was the painter, and that soft-spoken painter, and he would paint on public access TV, and you'd watch him, and he used to always say, it's your painting. You do anything you want. It's your painting. It's your bush. If you want to make it have this messed up branch and stuff, it's your painting. And as a kid, I loved that. It was like, this creativity, this man was, allowing me to not only make mistakes, but not even call them mistakes, to embrace the imperfection. And that's the same thing with trading. It's your trade. You go into the trade with an idea, with a risk tolerance and a plan, and that's what's really important. But the main thing is that your risk and your reward, you've got that relationship. You're managing that relationship, where you're managing to always have an edge. I don't know, Mark, you probably have a better way of saying that, maybe.
First of all, apologize. I just started some heavy duty construction work outside my office here, so if it gets a little noisy,
I can't hear anything.
Okay, good. Well, I think thinking of it in terms of multiples of risk is where I always come down. So I like the way he described it. I think, I've got something with a really tight stop. Can I de-risk at 2R? That's kind of how I think about it, even with an overweight. Yeah. So I might put on an overweight leg of a trade, but I'm not gonna just de-risk that at a half an R or something. I'm still saying if I can be really tight and I take a bigger position, maybe I take a low of the day stop on a large portion of it, but I'm still going to go at a multiple of where that stop is. I'm always thinking in terms of, you know, multiple R's. So, you know, and then that's how those metrics, though, you know, for me, always wind up. My average gain winds up a multiple of my average loss, because that's how I'm always thinking about it. That's how I'm backing into everything.
Your results are going to show you what you're doing, you know, and you're going to see, like, again, if you start circumventing things, they become the new norm, you know. So if you keep, you know, circumventing your average gain or your average loss, however you do it, eventually that's going to become, you know, your average gain, your average loss. So you look at those numbers, and then you've got to go back. This is the important part, is you got to look at your numbers and then let them make their way back to the, from the spreadsheet back to the trading, and do post analysis and say, hey, am I leaving money on the table unnecessarily? Like, this stock did absolutely nothing wrong and I'm selling on way too soon. Well, in that case, even though you may have made a decision based on your tolerance, well, you know, if you go and look at a bunch of trades, you see that, you know, probability wise, you know, I could be doing a lot better. So you really got to take, you know, your own risk tolerance and marry it with the analysis of the stocks and the charts, and sort of come to a happy agreement, a happy medium there, where you're accomplishing your goals, you're staying within your own tolerance, but also taking advantage of the technical analysis and the probabilities based on, you know, the nature of the price movement. So again, these are not black and white questions that can be answered. These are good, great questions, but they're not questions that can be answered just black and white. And I say, do this, do that. There's context is everything with trading. And we've tried everything we can and done everything we can to, you know, make it as mechanical as possible. VCPs, all these rules of thumb, and a lot of vernacular, and of course Monalert having violations, but still, you know, these are tools, and it's an art, and it's an art that has to be, you know, applied within your own risk tolerance. That's the main thing. And your own style too. Some people, you know, love to fast paced, and they're in and out, in and out, in and out, and others don't want to do that, and it doesn't agree with their personality. So that's another thing, you know, really what you know, the trading style that you use needs to also agree with what you feel comfortable. I know it's not the greatest answer, a black and white answer, but best I can do today.
All right. Well, with that said, as we're running over here, let's wrap it up for today's session, and the replay of which will be available within a few moments. There are no earnings of any existing holdings that we have currently, but always stay in touch with checking on any stocks that you're buying on your own for, as we are still in earnings season, although getting towards the end of it. And with, we have, again, the Wednesday session this week with Lou Kerner, 5 p.m. Eastern time, to talk about crypto, Bitcoin, and also the Mark Ritchie and Brandon question and answer session on Thursday will be posted accordingly on Thursday.
Yep.
Thank you, Mark and Mark, for your time, and we'll get back at it soon.
All right. So you guys monitor the platform for updates.